All right. Good evening, good morning, good afternoon. Welcome to the Inner Circle Live A's and Sessions. I'm your host for tonight's session, along with my awesome partner, Mr. Ryan Carthage, and we're definitely happy and grateful for all of you being here with us this evening as we take a look at the technicals and the fundamentals to see what we can take advantage of in this awesome Forex market. So without further ado, please turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure we're ready to participate and engage. And speaking of participating, if everybody can drop me a 1 in the chat, let me know you can hear me loud and clear. It's been a while since we've done this evening session. I got to make sure that I've got the dust all knocked off and I'm ready to go. All right, quick sound check. Awesome. And we are back at it, right, for the live A's and session. So let me, all right. Thanks for doing that, everybody. Appreciate you letting me know. All right. So, yeah, I am happy to be back with all of you this evening to see what's going on in these markets, right? To look at today's price action. Let me make sure all of you have control over your microphone. As always, hey, if we're not making a comment or asking a question, let's do our best to keep our microphones on mute as a reminder. So let me go ahead and close out of this. And let's go over to the Forex calendar, right? Pretty light day. Coming out of yesterday, we had the Reserve Bank of Australia raise rates, right? We were expecting that another 25 basis points. But the key is that we see that, where was I earlier today? Looking at some data, wherever the article was, my apologies, but was it, they raised rates, but they didn't back off, right? They said, hey, if it's necessary to raise them, we may have more rates in the future, signaling that it might just not be one more rate hike. It may be multiple rate hikes. So we'll see how that go. Gave the Aussie a little bit of steam today. You can see in the US, we knew that Chairman Powell was speaking today, and he said that, hey, Powell says interest rates are likely to rise further. Okay. He reiterated that the disinflationary process has begun, but it has a long way to go. And these are the very early stages. So he said that if the strong job market persists, let me move my thing out of the way, additional interest rate hikes will be needed, and the terminal level of the Fed funds may get higher than previously expected, right? And we saw the markets move today. So again, that back and forth with the markets and the Fed, hey, saying don't bank on a rate cut in 2023, which is what they've been saying. The market is pricing in something different. We'll see who wins that battle, especially after that jobs market report on last Friday with the non-farm. And then you start to see some of the other central bankers kind of fall in line with that. They all kind of seem like they follow each other with the rhetoric. So Bank of Canada, McKay, far too early to think about cutting rates. You know, we are, let me see here. Let's go into this Twitter. We are pausing hikes. Question is whether we've done enough, not whether we cut. So they all kind of follow behind each other with the same rhetoric. So we'll see. But you see, we are pausing hikes. That's a little bit different than the Fed. But at the end of the day, we're not quite out of the mess yet. So you never know. Everybody's going to remain data dependent in regards to central banks. And we'll see what else is out there, right? Always having to prepare for the worst, right? That's their job. That's their job. So we'll continue to watch that. Welcome everybody that just joined us. All right, there we go. You got control over your microphone. So let me jump back over to the calendar. And so kind of like just some central bankers speaking today. Wednesday, we got some other central bankers speaking from the Fed. And it's, like I said, it's pretty light, right? We got beginning of the month, February, that last week was super busy. So this week is fairly light. Okay, so we got some GDP numbers there coming out, monetary policy report hearings. That's going to be the notes from their last meeting, most likely. We've got Friday, we've got CAD unemployment numbers and employment change numbers coming out. So fairly light compared to all the fireworks from last week. That's not necessarily a bad thing. So let's jump over any questions in regards to the fundamentals, or anything that somebody read that I didn't catch today might be of interest. Nope. All right. So yeah, let's check out the DXY, right? Kind of back and forth. We can see how last week ended, and now we can see this week. It'd be interesting to see if we get a correction back down to test that bullish momentum that we got on the US dollar after the rate hikes. But you can see if not the rate hikes, but the non-farm payroll and that explosive jobs number that came out. We do have tonight, I believe, somebody correct me if I'm wrong, we have the State of the Union address here in the United States. Should be going on now, if I'm not mistaken. So it'd be interesting to see what the president has to say. I'll catch up on that once we close out. Yes, okay, appreciate it. So it's on. All right, yeah. So you never know what comes out with the divided government that we have. So I always be on alert. But so the US dollar, you can see, hey, we didn't take out the A, and it's pushing to the upside. But we can see that's just a strong fundamental occurrence that happened. We still have a stochastic that's in the sell zone in regards to the momentum. So it's kind of a wait and see to see how the market's going to shape up and respond coming off of an end of the week announcement like what happened last week. Still trying to figure it all out. So if we that's the DXY. And I haven't had a chance to check the bonds and everything. I've got to read up on what's going on with the bond yields, catch up everybody on that probably tomorrow, because that's always important, those bond yields, especially in times like these after the jobs numbers. But so we'll see. What I want to do is I want to first take a look at, for those of you who were on the morning session, we didn't get a chance to post it, but Ryan had spotted a CAD in play on the 15 that actually played out pretty good. Down here on the 15, it's starting to turn around now for a little bit of a correction. But you can see how, man, he caught that early this morning. He spotted it, and it made a good move almost to that 382. Interested to see what's going to happen now, but if you took that trade and you're still in it, right? Manage your trade, adjust your stops, do the whole nine. But man, he caught that right off the top today, and it made a nice move down off the break of that cloud. What is that? Over 100 pips, right? So when you get that much in the profit, you gotta start shutting down some stuff, in regards to adjusting that stop loss, taking some money off the table potentially when you're counter trend trading, right? So we'll see if it'll come down and catch that 382. But that was a pretty awesome move from this morning session, and it happened pretty quick too. Here we are on the 4. So we've got just about a 50% retracement, and we've got a stochastic in the buy zone, right? So that's something to think about, right? If you're holding that position, I'm out of that position now, but we're settling in a bit, right back in this mess, in this range, top of this range right here, kind of retesting, right? So if you look at this as a right, kind of a range, and price has been dancing around this level, you can see how it broke out and came right back down into that level. So it'll be interesting to see how that's gonna proceed. That's gonna be quite interesting there on the CAD. But you can see how it's starting to move bullish a little bit up out of the zone. If you come here, right, to your daily time frame, right, there's potential. We know that, right, for that to continue bullish. We don't have a 382 yet off of this daily fib to the downside. Okay, still a lot of speculation around the yen. That's why these yen crosses we're catching them in the sweet spot and making the plays that we can. But, you know, until we get better, it's a lot of back and forth in regards to, you know, who may be taking over as the BOJ governor and whatnot. So I expect that to continue, you know, to kind of lead a price action somewhat choppy with the yen. So we just make the plays as we can. But that's where we are. That was a good move this morning. I am interested to see if that wants to. Here's a 1 hour, right? So we kind of got a mixed bag. Got a mixed bag on that. So if you're in that, just protect your trade because we got to break out and retest to that zone. But you never know with these yen crosses right now because you got to see how choppy that is, right? So that you always make sure you protect the bag, right? If you're able to get into profit, make sure you lock some of it down because there's some uncertainty around the yen crosses right now. Any questions on the CAD yen?
No.
All right. Let me ask all of you a question. I know we're all different style traders. Do you all like the 15-minute setups? It's kind of like the sweet spot with a lot of setups to get you in and out within the week.
Yeah.
Get some feedback on that. You like that?
Yeah.
Okay. Yeah. It's kind of like, you know, it moves just fast enough. That's fast enough, you know, not too slow. You know, depending on what your pip goal is, you don't have to. A lot of them you don't have to carry. You know, you can close them out. So it's been real good price action on the 15. So we'll keep a focus on that 15-minute chart for the group. The other one was Donette this morning was on, and as Ryan was talking about the CAD, and she was like, "Hey, this dollar yen is in a sweet spot too," and I was kind of hesitant. I admit because I knew Powell was talking today. So I did make the play because I wanted to wait and see the dust settle, but it made the same move. I mean, it was up around this range this morning, and I know it hadn't broken that 131 level yet, that daily level. And yeah, it made a nice move. I think that was close to 100 pips too from where she actually spotted it this morning. So we'll see if we get that 382 target. We might get it on both the CAD yen and the dollar yen. But depending on where you got out, you might have been, you know, in good profit right now. You know, and if you shut it down, you know, don't blame me on that, right? Secure the bag when you can, but it may be moving back to retest that 131 level that it broke, but coming off the highs. So this is where you see, like, when you get these 80-20s, right? We get the AB boundary plays too. What's really cool, right? If you start taking your measuring tool and you go from, right, say you're 127, right at the top of that 80-20 zone, and your D extension, you can see there you get just coming in just about 100 pips, right? Whereas when you take it from your 127 down to, okay, your 382, it puts you in a positive risk to reward ratio. That's why I love that spot, right? Because I can actually keep my spot. My sometimes I get in there where I want to, you know, put a little bit more in regards to lot size, increase the lot size. So I'll run it a little tight and wait on those cloud breaks and things like that and trend line breaks. But simple trading, the 80-20s, it's like I just leave my stop wide at the D because it's kind of like when we say if it doesn't take out the A, it has no choice but to go your way. When it comes up around that 80-20 zone and you got that shallow retracement less than the 382 and it breaks that B boundary, guess what? If it doesn't hit that D extension, it's probably going to head to the 382 or make a nice move towards that you can clean up on, right? So if you wait, right, and you have to be disciplined, and if you say, I know last year I was telling people, you know, if I had to do it all over again, I would just sit back and just pick off 80-20s. That's all I would play. I'd just be patient. Well, if you sit here and you wait on this move somewhere in this zone, right? And when price gets there, right, especially if it's if it starts to stall out like it does oftentimes, we know, right? Think about it. We know that we take our risk and divide it by our stop loss. Follow me on this, everybody. So if I'm playing an 80-20 and I'm sitting there and I'm waiting on that, okay? If I divide my risk by my stop loss, it doesn't matter whether I find the 80-20 on the pound dollar, the UJ, the Euro GBP. It doesn't matter whether I find it on the 1 hour, the 4 hour, the daily, the 15-minute, the 5-minute, right? That's the beauty in it, because it's literally the same setup across all your asset classes and currency pairs, right? And no matter what, if I'm risking 1% or 2%, 1% or 2% is 1% or 2%. The only thing that's changing is my lot size. Of course, this is going to be a bigger play if I find an 80-20 on the 4, right? So when I divide my risk by my stop loss, it's going to make it's going to lower my lot size. You guys follow me on that? Drop me a 1 in the chat. I want to make sure we get this clear, right? This is how you can really simplify your life in trading, right? And no sweat. Okay. So it doesn't matter, right? If this stop loss is 100 pips, and on another setup in another trade, the stop loss from that 127 to the D extension, okay, is 50 pips. If you lose the trade, you're gonna be out of the same percentage, 1% or 2% or 3% or whatever you decide to risk. It makes it very, very simple. Simple. So I'm looking for the same setup, no matter what the time frame. So of course, if I trade, I find an 80-20 on a 5-minute, my stop loss might be 15 pips, 20 pips. So maybe I'm trading that setup at 1 mini lot or 2 mini lots, depending on the size of your account and your risk, right? But it might only be, 30 cents, 40 cents if I find it on the 1 hour or the 4. That's it. That's it. Any questions on that?
No.
No. So the key is that we just have to be patient, right? We just got to be patient. Hold on 1 second, everybody. Okay, give me just a few minutes. Be right back. Sorry about that. Okay. So I just want to make sure that we've got that down. Okay. So no matter what the time frame, no matter what the pair, right? That setup is pretty universal. And then the way we work our risk management out makes it really, really simple. Okay. All right. So there we go on the UJ. Any questions on that? Nope, we're good to go. All right, cool. So we covered the UJ, we covered the CAD yen. Oh, I want to go over one that just posted, which was the Euro Swissy. Okay. Right. So we find it on the 15, right? The zone is the zone. Okay. The zone is the zone coming down off the highs. All right. So we can also see, right, that we're kind of right in that same zone. But overall, I'll zoom out to the higher time frames pretty soon and show you, right, what we're looking at overall. But you can see how we're right in that 80-20 zone. All right. It is what it is. When we see it, hey, let's get that posted, right? So right. So if you look at that, that's like 40 pips, but you see how you go back to the 382, right? And you're close to 80 pips or whatnot. Okay. Makes it super simple. Now you can wait for your cloud breaks and play it tighter, right? For the higher risk to reward ratio, if you want, right? Or you can play it like that. But that's right in the 80-20 zone. See how it's formed that low? Okay. So hey, we just wait. Let's see how that plays out. If we zoom out, okay, to the higher time frames, you see what's going on here, right? We're right around this 50% level. We've got a possible double bottom. So where we may initially find that setup, you know, on a lower time frame that we like, okay, there's a possibility, right? Because we know how to do top-down analysis. We know how to do top-down analysis. Hey, this could turn into a larger play, a larger swing play, right? If that's what we want. So we have moved down to the downside, down ABCDs, right? Now we run into the 80-20 on the 15-minute. That signals us and lets us know that, hey, this may be a reversal. And then when you zoom out to your daily, okay, we may have a double bottom right at the 50. Okay, so we may be ready to continue that upswing. Okay, so there's that daily fib brought down. That's what it looks like on the 4. So we're in the zone where we could be finding some support, which plays right into our narrative on the 15-minute chart. So if you go to the 5, you can see how, right, it's moving sideways above the cloud. That's just choppy. Okay, but we see that on the 15 already, right? How that's just moving sideways. Okay, so but our zone is there. Our zone is there. Right, our risk to reward ratio is there. Okay, you can put it right below, you know, the low and tighten it up if you want to, right? But if you want to keep it super simple, just put it at the D, work your risk out, and let it go. Any questions on the Euro Swiss? So we go through these and we post these, right? Make sure that, you know, for your own sake, that you're still, you know, marking up your charts. Hey, do I have that similar alignment? You know, if not, you know, what am I doing that's not, you know, making me fall in sync with what they have, or maybe they're wrong and I should let them know what I see, right? And that's how you get that back and forth, and everybody gets better. That's why we tell people, hey man, don't be afraid to post your charts, right? You may see something that we don't. Okay. So that's what led to a good trade this morning, you know, on the dollar yen for a lot of people. Is we had a teammate, you know, notice it, like, hey, that's in the same zone too. Right. Okay. So that's the Euro Swissy there. I'll take a look at, we'll keep looking at some of these these Swiss pairs real quick. That CAD Swiss, and we know we've been tracking that in the newsletter for a long higher time frame swing. And this thing is still kind of bouncing around, hovering around, doing this thing, right? But if you now you can see how it's still, right? It's just doing a dance within the AB boundary. So not too much, right? But it's still within that AB boundary. It's just moving sideways. So we need a breakout, right? We need that to get going. Okay. So there we are. There we may get a further push down, maybe to daily support. So just keep an eye on that one. That's a longer term swing. It's just kind of just moving sideways there. So that's the CAD Swiss. I want to take a look at this Aussie Swiss. So we're looking at that one too for the long swing. All right. So we've got some levels marked. And you can see, right, how we at that pullback took off, hit that 118, 127 zone. Now it's trying to find another bottom. Okay. See that? So we get today to close out. We'll have another level of support there, and we may be ready to continue to the long side. We got a stochastic in the buy zone there. If you come down to what's the time frame I was looking on here on the 4, you can see how you formed that bottom there. We're just waiting on that daily to close out. And then if we come down here right to the 15, you can see how it's starting to track, right? It's starting to reverse up through the zone. You had down ABCDs, right? So I think I want to put this in line, right, with how everything else is going. So I'm gonna leave that like that for now because I want to see that move buy side. That's what my bias is. And we'll see how that goes, right? If you go to the 1, you can see how it's trying to break out. It's trying to. We've got a bullish cloud up ahead. It's broken through. And now it's just kind of just moving sideways, stochastic in the sell zone. So we've got some stochastic misalignment through the time frame. That's okay. It'll make his mind up. It'll make his mind up eventually. So that's where we are on the Aussie Swissy. So long-term play on that for me. Trade it small, let it keep doing the dance, see where we end up. All right. And then our NZD Swiss play that we posted, that one's still in progress. That one's fighting a good fight. It keeps dancing around. So let it play out. Here we are right here. Starting to try to make that move again. All right, so look at that. That's just hanging around. It's hanging around. Look familiar, doesn't it? Right? We just saw some of the price. That's the Euro Swiss. Sorry about that. No wonder it looks the same. We just saw it. I wanted to see the NZD Swiss that we posted. My fault, everybody. There we go. Check it out. Here we go. Right here. Yeah. Right. We got that initial push up. Okay. That initial push up. And now it's just fighting. Right. It's fighting. It's getting close to that D, but it did it earlier too. But then it pushed up. And then once Jerome Powell got started talking and everything today, it kind of made a move back down. So that one's still fighting a good fight on us. Just moving sideways. Hopefully we get a breakout back up to the upside. Okay. Any questions on the NZD Swissy? See how we end up there.
No.
All right. So let's take a look at some of these euros. Right. So this euro, I know there's a few members sitting in this EuroCAD. And it is slowly trying to make a move, but it's doing a dance. We're right back at the key support. So we got to watch out for that. But you can see here how, right, if we zoom out, it started to make that push down finally. Right? And I don't know, is anybody still holding that position? But it finally started making his move. Look at that. That's a good move. Down. So that's what is that? The high over 270 pips. It's taking forever. It's gonna be interesting. But we'll see how that plays out for sure. He took the GCAD. Okay. Okay. Yeah, this one took some time and chopped around. But you see, this is what I'm saying, right? So, right, you manage your risk, don't overload yourself. And you can see how it didn't get the D extension. You see? And now it's doing a dance. Okay. And so you have to tell yourself, you know what? I'm gonna do my best to try to hold it till target. It's tough, right? Or, like a move like this, hey, I'm managing my trade, I'm up 100 pips, I'll make the adjustment. Once you get a move to the downside, then you can possibly revisit it again later. But you can see how this fib is still in play as a result of that D extension not getting hit. Okay, that's just swinging, right? It's not a right now today type of thing. But those small setups can accumulate. Right? It can accumulate, and they can make you money. They can make you money. Learn how to catch the pips consistently. The money will come. The money will follow. Right? That's what you want. That's what you want to get focused on. So that's the Euro CAD. We'll see. Right? It's finding support on that daily, but I'm interested to see if we can come down and catch that 382. It's made a nice move back down. Right? You would think that after this nice correction here, right? So that first correction out of the zone, right, came down 240. And then it took off and it still didn't get to that D extension. Still had another sell-off. So let's see if we can, maybe we'll get a correction on that and then a further move down. Any questions on that Euro CAD? And that's just it, right? When you're looking at the overall swings, when you're looking at the overall swings, it's like, hey, we're just in an up retracement zone right now, looking for a deeper correction. So your overall bias on that Euro may be bullish, but hey, it's correcting right now. That's it. That's all that's to it. That's all that's to it. Okay, so that's the Euro CAD. I took a look at this Euro GBP. Right, and so you can see how we drew it up, okay, coming out of the weekend. And we're looking for that correction, and then we're thinking long, right? So we got the slight break of that B boundary, and we're looking for price to correct down into the zone, and then for a potential buy in the future. Now, if you like to play that counter trend move right there, you can play it. Absolutely, you can. Lower time frame, cloud break, trend line break, right? 60 pips or so to the downside. Or you just wait for price to work its way into your sweet spot, whatever that is based on your trade plan. And then you look to get long on it, right? So I've already got like 3 levels to the upside, B boundary 127 and the D extension, right? The 1.618 D extension, if we can get a nice correction and the market's looking good, both fundamentally and technically for a long on that. So that's where we are on the Euro GBP. So you can see like on the 15, okay, here's your cloud break, right, on that correction, right? That's what you're looking at, okay? So it's playable, depending on your trade plan and if you like to trade that, right? That's a playable move, okay? You got to break of the cloud to the upside, right? You might be out depending on what your rules are. But you can see how we broke and we just moved down. Okay, that's how that goes. All right, we look at it from the 5 minute. Okay. Nice clean move. Okay. Nice clean move. All right. When that AB boundary forms, right, we look for just a few things to occur. That's all. Stay focused on that. You guys will do well. You'll do well. Any questions on the Euro GBP?
No.
Jada. Let's look at this Euro USD setup. So you can see how, okay, the correction in the zone. Right? We got the new AB boundary. We got that D extension to be hit. Okay. See the jobs numbers come out, and you just see it just collapse to the downside. New AB boundary, there's your retracement and your correction. So if you go to the 4, you can see what's occurring, right? Just how we drew it up. Hey, we're gonna get that correction deep into the zone is what we want, and you can see that's exactly where it's headed, right? Matter of fact, we tapped the 61.8 already, and you can see we're starting to get that pause in the price action. Okay, so if you're thinking, you know what, I'm a bull on this. This is a 4 hours in my zone. Okay, hey, maybe I want to come down to the 15 or to the 1 and wait for a cloud break. See the swing? Look, we don't have, look, you see how that pushed up and gave us that 382 just about earlier? Look, AB, shallow retracement less than a 382. Here's our 118, 127 zone. Look at the pop. Boom. That's as the Chairman Powell was speaking today. See? You just need a catalyst. We find the technical zone, then we just need a catalyst, right? And you can see how it pushed up. And now, right, we correct it. Okay. But we may be ready to make that move. We'll see. If you come down to the 15, right? Look at the zoomed in swing. Look at the swing on that. Look at that. Look at that. Right? It's like, I don't know if this is going to happen. Then it happens. Look at that reaction, right? That got close. Okay. So it pushed up, it took it away, and now you can see the fight is going on to where it's trying to get back. It's trying to work its way back. Trying to work its way back on that. So we know, right, hey, we've made a pretty decent correction now. Okay. We're getting into some pretty good zones. Our stochastic, the momentum, right, is slowing down to the sell side. Look at that. Okay. And we're starting to get that pause a little bit. So this is when you want to keep an eye on whether you're playing it, okay, as an 80-20 on your lower time frames. 80-20 on your lower time frames. Looking to eventually see it get long and continue, right? After doing your top-down analysis, this could just be the start of your trade. Okay, then you manage it. So that's where we are on the Euro USD. Let's see what happens right throughout the rest of the week with the dollar. Okay. Yep, right here. You're talking about after that push up and that pull back to that zone. Yeah. Took it out though. But with your crown, when you're running your completion, you run it like this anyway, right? Not the smart fit. You run it like that. Okay. So that would be still in play, right? We're on the same page as that. That's what you're looking at. Yeah. That break, right? And then that pullback. Like that. Yep. Yeah. I'm with you on that one. Good eye for sure. All right, so that's where we are. Okay, let's see if it can pick that momentum back up. All right, see if it can jumpstart. Get going. Okay. Speaking of that, I'll jump over. Since we're talking about that, we'll take a look at the pound dollar. Right, just so you all can see, right, the tendencies, right? Doesn't that look similar? That price action? See? See that there? So let's see, right? It's doing the dance. Let's see if it can continue, right? Almost got to that D. We didn't get there though, right? We didn't get there. So let's see if price wants to recover, okay? The pound not exactly fundamentally, not in the same situation as the euro, but you can see it's the same type of price action, right? Same type of price action. So it's just a matter, right? That same type of crowd setup where you have price trying to reverse, okay? Look at that. Took it out. Here's the pullback, okay? Like that. See that? So sometimes it's violent, but you can see it's still, the harmonic is still there, right? The waves still there, the rhythm is still there. It always finds its way back, right? To equilibrium and then the flow. So let's see if that can hold. Okay. That's been pretty wicked. But the beautiful thing about trading zones and trading levels is none of this really matters, right? It just becomes a situation where it doesn't even matter. Like, it's either, right, I'm either about to get stopped out at my 1%, whatever you're risking, or I'm about to make money the other way. That's why we like to pay attention to key zones. It just simplifies things for us. Right? Makes it simple. Because I know over time, right, if I'm trading enough of these setups, and my risk to reward is what it is, right? Sometimes, what is that? Sometimes we've seen where it was like a 2-to-1. Sometimes it's a 1.5-to-1, right? But we're in a positive. So if we just stay disciplined with our risk management, we stay disciplined with it, then we know over the long run, we'll make money. We'll make money. So then you decide, right? When you get around these levels, what you could do is, okay, if you're not splitting up your risk, so if I'm risking 1% and 1%, I mean 1% at this level, do I split it up to 0.5% and 0.5%, 2 orders, same stop loss, but different TP levels? Okay. Do I do that? Or do I watch and monitor my trade? And if I see it getting close to my TP1, hey, do I take 75% of my trade off the table, move my stop into profit or break even, let the other 25% run the TP2, right? Because if you're doing that enough, then that second run, right, that run the TP2, right, 75% off, 50% off, however you want to do it, right? That run, you get enough of those runs to TP2, it starts to compensate for your losses. Everybody follow me on that? Drop me a 2. Think about that. Right? It starts to cut into those losses, right? I'm just going to leave that percentage on the table. You know, if I get it to run the TP2, we always put TP2, but we know TP3 is right at the top of that 8 boundary. We know we do our top-down analysis like we saw in the 1 euro setup, the Euro Swissy. If it continues to get long and run, right, then we can always add back to a position or whatnot. But just thinking about it from TP1 and TP2, like, man, if I just leave a small percentage to run, that can provide me a cushion, right, when I am taking those losses. Okay. All right. Hope that makes sense. Okay, so that's the pound dollar. So I wanted to show everybody that between the pound dollar, and then if we come back and we move up to the Aussie dollar, okay, we can see, look, see how everything collapsed against the dollar. But hey, we know it's not just a collapse, it's just a correction. Right? We've got a correction. So we saw this, right? De-extension hit. Okay, we just saw that on the other dollar setup. De-extension hit with the euro, turned over. But structure-wise, right, if we never had a fib on here, we know we were in a situation where we had a double top, okay, at a key weekly level, that's 71.39, and it turned over. So if you come down to the 4, okay, and I had posted this because I'm like, based on this 4-hour fib, we may move deeper, but not before the pullback. So you can see how now we're starting to get that correction. Okay. So now you guys have been with us for a while. You can eyeball this and you know what's going on the lower time frame, right? Even see that there? You know what's going on. Okay, so you know how to take this. Okay, see the same price action on the dollar pairs. See that? Look how that U-turned. Right? A little bit different position, right? Based on where it's at in the fib sequence. But you can still see that crown action. They pretty much all, right, did the exact same thing. Okay. Okay. So let's see, right, how deep of a correction that we get. But that's why we posted it in the Discord, because it's like, hey, we know this is already, the double bottom is already at play. We had talked, the double top is already in play. We had talked about that, but hey, maybe we get another correction up into the zone and then a continued move down, right? And you can see how it's moving right up to the edge of that zone now. So if you look at this on the 1, okay, look at what you have, see? See that? AB boundary, shallow retracement, 118, 127 zone, and here's the push back up. Okay, so if you come, right, that 127 there, right, it's 113, 14 pips. Your D extension was at just about 60, 62. Okay. So that's an easy setup. That's an easy setup there, everybody. Right. That's an easy setup. It actually held here, right? You see how it's holding, how it held. Broke it, but didn't stay below it. All right. So we're just looking at price action, support, and resistance. Okay. Past support becomes future, past resistance, becomes future support. See? Yeah, you guys got this for 2023. This is it for you guys, right? This is it. So here, man, I got an impulse move down, impulse leg down. Where I'm going to these lower time frames, where's that 80-20 at in that correction? Where's the 80-20 in that correction? And I sat back for the longest time, right? Back in the day, knowing this, but you come into the game and people say, well, you guys tell me, right? How many of you can drop me a 3 in the chat. They say, only trade with the trend. Right? Only trade with the trend. And if you hang in there long enough, you start to think about it like, well, hold on, right? Trend trading, okay, when you look at the data, is you put yourself, you could put yourself in some, your high risk to rewards, right? We see that huge C to D move playing out. We see that, right? When you're trading with the trend, or if you're running a trend line and you're running a trend line and you're like, you know what, I'm gonna roll with the trend when it makes a higher low, I'm gonna get in on that trade, right? So, you have your trend line going and you say, you know what, win this trade. Okay. When this trade comes here, right? Bang, bang, You say, you know, here, I'm gonna trade this trend. That. Spot. So trend is up. But then, you know, you start becoming a little bit more seasoned and you read about, you know, some of the most successful traders in the world, right? History. Like, hey, they were counter trend traders. Like, oh, okay, well, I got that, but I'm gonna trade with this trend. Then you start reading, you look at stats, and people will tell you, like, I am a trend trader, you know, win percentage 35, 40%. I'm like, well, okay, 35, 40%, 45%, you know. I guess maybe hopefully you get better as time goes on, but I'm like, well, in order for that, right? And I'm glad that my mentor taught us about, you know, certain sweet spots, you know, in the market and Fibonacci and stuff. But it's like, in order for this move to get here, back to that trend line, it has to come down to that trend line. And so I'm like, well, I'm reading that some of the most successful traders are counter trend traders. So it's not necessarily true what people say, because they made millions upon millions counter trend trading. And when the chief taught us, hey, this is an exhaustion point, potential exhaustion point, especially after noticing that there's a shallow retracement, it breaks that deep boundary. There's a high probability that it will work its way back. I'm like, well, this pretty much represents somewhat of an extreme, right? Especially when you tag it with support. This is why we do our top-down support and resistance, okay? So you get good confirmation, good confluence. It's like, that makes sense. If I want to short, it has to go here anyway for my ideal short position. And so I sat back for the longest time, like, hey, like, I'm measuring this stuff. Oh, that's 100 pips. That's 150 pips. I'm on a 4-hour, I'm looking at a 4-hour fib. I'm like, this is retraced 300 some pips into this AB boundary. And in this zone is going to get short. But I'm like, this kind of has to happen on a pretty regular basis, right? These corrections in the market. And then you start learning about harmonics and how people are successful trading harmonic patterns. And when you start reading about those, you're like, oh, it's putting me at an extension point, which is an exhaustion point, and it's a correction. So you start putting it all together, and you're like, this is my #1 trade setup. Is it? Because it could get all up in here and float, right? Multiple levels. We know that. And that's why we say, hey, we want our sweet spot zones within that boundary. But I know this is very simple. I don't have a 382 pullback. It broke the deep boundary. It's stalling in this 118, 127 zone. The only other option is like not 1, 2, 3, 4, 5, 6 levels, 7 levels count to 8 boundary. There's pretty much one. And if it avoids that one level, it's going to move where I need it to move. Right? It's going to move where I need it to move. If you give yourself some grace, like Ryan always says, okay? And you give yourself time, and you're willing to take a few butt whoopings in this market, you'll figure it out. You figure it out. Okay. So that's why we play the move, right? Whether it's on a fib like this, you know, or higher time frame, like right here, ladies and gentlemen, That's an 80-20. We're just moving inside the move in this correction. But this here, look, that didn't hit the D. It did all types of stuff, but it didn't hit the D. Right? Here was your point right here. The key in this is knowing that if you run a tight stop loss, higher percentage chance I'm gonna get stopped out. That's fine if that's how you can trade, if you can stomach that, right? But if it ruins your day every time you take a loss, you might want to think about doing something different. Okay? You don't want to talk to anybody? You're mad, kids wondering what's going on. You might want to try a different setup, right? Other than running your super tight stop loss. Okay. So now, right here, AB boundary, I don't have a 382. It broke the B boundary, pushed here, right? So even off this move out of this 118, 127 zone here, don't look like much, but it's an Aussie dollar on a 4. That's 183 pips. I'm locking something down on that initial move. Something. Okay. Now, it moved back up and it did the dance. But somebody tell me, did it hit the D extension? Yes or no?
No.
Thank you. Appreciate it. Now, the problem comes is when you start trading with your gut. And for some reason that day you feel good and you completely close the book on your trade plan and your risk management, and you say, you know what? I'm taking this at a standard. I'm taking this, you know the size of your account. You know you only should be trading that at 30 cents, 3 micros, but you know what? I'm going to trade this at $3. And now you get whipped around and you're in here at 5, 6, 10% of your account. And now your forehead is sweating and you're losing hair. Job checking your phone, right? You know what you've done. You're checking your phone constantly. You're not even getting your work done. Now you're in trouble with your boss. And your trade is not going your way. Whereas if you know, I'm in, right? 1%, I'm comfortable with that. 0.5%, whatever, 2%, whatever you're comfortable with. Then it's like, man, look, hey, maybe I secure that. Maybe I caught it to secure that. If not, I missed it. I know if it hits this stop loss, I'm out of whatever percentage I was risking. Right? We've been at this for a while now. You know, these setups come on a regular basis. Right? You don't have to put it all on one setup. If everybody hears me loud and clear, please drop me a 4 in the chat. We have to stop doing that. Is also what makes you jump out of a trade prematurely. Because you know psychologically, I'm way over leveraged. I'm in the blue. Let me get out. But it catches up to you on the back end because you're going to need a certain amount of trades to hit target for you to compensate for your losses. I know that if I'm at 1%, I have to lose 100 trades in a row. Has anybody in this group, Ryan, have you ever lost 180 20s in a row?
Negative.
Welcome, by the way. Sorry.
What's up, man? Apologize for my tardiness, man.
Oh, it's all good, man. It's all good. It's all good. No worries at all.
I've never lost 180 20s in a row. Hasn't happened.
Right? I already know that if my stop is here, right? If it's really a lazy way to trade. Like it's simple. if my stop is here, if I measure from here to here, right, that's 128 pips. That's 240 to the 382. Right? You've already made your money down to this level anyway. Right? You've already made good money. So I know I'm in a positive risk to reward. No, it's not a 10 to 1, 9 to 1, 1,000 to 1. Right? It's not. But it's positive. So if I can find that consistently, right? And I know I'm not gonna lose 100 trades in a row. Probably not gonna lose 50% of the trades, right? Probably not going to. Then the end result has to be, if I'm managing my risk right, the end result has to be I made money. Right? Think about that, everybody. So I want to make sure we covered that because yes, we have our AB boundary setups. Yes, we have our beautiful C to D pushes. But you know what? If you just lock it in and focus on one particular setup, hey, Ryan and Benny sent out a new AB boundary. You know what? I'm not going to do anything with that yet, but it's going to be on my radar because if it does break this bead boundary prior to reaching 382 and it gets up around that 118, 127 zone, I'm most likely going to take a shot on it. Because I'm going to be just ridiculously disciplined with the process. I'm not going to worry about the results. Follow the process. Because the math works out. And yes, you may have a week where you take trades and you are down. You win 1 out of 3 of them. But you got to look at this thing over the long term, right? The month, the quarter, the year. And that faith, right? I was listening to one of the guys I follow on YouTube all the time. He's like, you just have to have faith. And he knew it because he's a scalper and he knew people were getting shook out of the trade they were in. And he just kept saying, you have to have faith. You just have to know when you see your setup, that this is just set up and you're following the process. You just have to know you're going to be successful. So while everybody tapping out, they tap out. And I think he probably made like 4,600, something crazy right that morning because of the way he trades. But he was saying it because he knew, like, they saw this candlestick drop and they probably got bounced out the trade. And he hung in there, right? Like that. So these are things to think about, everybody. These are things that kind of go beyond, just, hey, I'm on the charts doing my thing, right? It's all about that mindset, which is why those Mindset Mondays are so, so important. Because that's what it's about. That's what's going to win. That's your ultimate edge, is what's between your 2 ears. We see this. We know this. You've been with us for a while. You can find this set up in your sleep. I know you guys can. But for some reason, we don't always trade it. Right? But we don't work our risk management properly. Ryan, anything to add before we close out? Hope that helps somebody tonight.
It's about falling in love with the process. Falling in love with the process. Understanding that it's not going to be easy, but at the end of the day, it's worth it.
Hmm?
It's worth it, man. But committing yourself to putting in the time, the effort, the energy that's necessary to develop the habits to solidify that process and those rules, it's worth it, man. It's worth it. Great session, bro.
Appreciate it. Hey, it's glad to be back, everybody, on the night session. I look forward to doing it. And we also look forward to seeing everybody tomorrow, 6:30 a.m. Eastern Standard Time with my man, Mr. Ryan Carthage, as we take a look at the market before the pre-New York session, all right? Well, before the New York session. So with that being said, everybody, thanks for being here. Have an awesome, awesome night, morning, or afternoon, wherever you are. Bye for now.
Thank you, Benny.